You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABBO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com. Welcome everybody to our Workshop Wednesday, casual conversations for serious workflows, brought to you by Schoolofbookkeeping.com, where it's keeping where you can keep books your way. I'll spit it out, right? Hi, Sean.
I'm doing very well. How are you doing?
Very good. Hopefully, we're coming in. Not hopefully, but we are coming in for a landing on the series for job costing purposes. It's the road, all about reports. This is why you do all this, right, Shanna? This is why you do all that setup ahead of time.
Yes.
It's reports that's going to tell you, did I do it right? Or
yeah, this is, or did I do something wrong?
Give me more. Give me more than you.
Yes, I was trying to let you finish. Yes, this is where this is the data that we use with our clients to let them know how everything is performing down to like individual jobs or overall as a company or by job types. This is definitely where you find out if you've set everything up properly and, like you said, what needs to make you fixed. Or potentially, while you're pulling these reports, maybe what additional trackers or custom fields that you want to use or start using to provide even more information for your clients or for yourself.
So because especially for this industry, and I think we had talked about this initially when we were talking about job costing in QuickBooks Online. Can you actually do that? For this industry, a lot of people do things based on gut, right? Or how it feels. Am I charging, or did I underwater in this particular project? And for most people who aren't as intimate with their business as they are working or doing the work, they measure, the measurement they go is what's in the bank account as far as cash flow, right? Is that where people find themselves when they do things that way?
Absolutely. We have a lot of clients that came to us initially that probably did the same thing. They judged how business was based off of the amount of money in their account, except that money was being spent for lunch. It was being maybe for them, maybe for their family, maybe for the team. And so it doesn't really give you the right information. And just a small plug, that's why we do Profit First with these clients in particular, I feel, because that is how the mindset has always been with them. Doing Profit First is what helps so much for them to have that similar kind of habit that they've created of checking the account to see how they're doing. And we can say, this is in fact now how you are doing, because we're using the Profit First system with them. So we're saying, just pay attention to this number. Look at this bank account number. Yeah.
And just to cliff, you would basically do a lot of separation of their main operating account into smaller accounts, and that way they don't get by
Right.
looking at this the larger number, not realizing that some of that's going to pay later things.
Yeah, like our call last week, part of what we were discussing is how we handle those retainers, how we handle those deposits from the financial side of posting. But the other side of it for us is that we're also moving that into a completely separate account for our clients. So it's still their account. So their balance is showing up, but we're saying here is your profit account. So here is technically the number you should be paying attention to, and not pulling money from these others. We also advise our clients to set them up as certain accounts, which coincidentally limits the number of transactions you can do out of that account or into that account as like a deterrent to make them not touch it.
Because one of my favorite stories, and it has nothing to do with job costing, but it's how it speaks to how companies their balances and make business decisions based off of what's in the bank. Is I had a friend who worked at the Department of Revenue in the state we live in, and he was in charge of sales tax, right? So companies would come in inevitably one customer or one business would come in and gripe, I can't afford to pay sales tax, right? Which then starts a whole conversation with, what are you doing spending the state's money? Right? Because they are, and side of that is they are making the business decisions based on what's in their bank account, not whether or not that money should be set aside to pay their sales tax. Because in reality, sales tax is never a business income or an expense. It's a liability. It's you owe it. You're collecting it.
Always.
You're collecting it to be paid later, and it's like a payroll liability. It's not yours to keep. It's yours to pay later, because there's dates about those things. So it's accrual dates and all that stuff. But that's all sales tax. But
well, and sales tax does have a place in the conversation, not particularly maybe this, but sales tax does. There are contractors or states where contractors are performing certain services that do have to do sales tax. I particularly don't support those states because I'm just not a big fan of sales tax. All of our interior designers require it, and it's a lot of work. It's a lot of risk for us as a business owner to take on. So if I can keep that to a minimum, I do, just on my side from a firm perspective, because it just gets really complicated. But there are contractors in certain states that do still have that sales tax. So we would create a completely separate account for that, and that money would automatically move over into that don't touch.
And that's what exactly. And that's what a lot of we're seeing in the industry is that there are applications, softwares, and those types of things that you can incorporate to your business software that does those things to protect the business owner from themselves. Right? Payroll services are being very famous for that. As soon as impounds all those tax liabilities, puts them out somewhere. So in reality, their bank balance is lower because it's been segregated and held on their behalf. To pay them.
I'm going to have a side note. It's just a quick gripe about that. People taking like QuickBooks payroll, taking it right away. And my gripe is that now they're earning the interest on my client's money and on my money. Because certain things like unemployment tax doesn't get paid until year end for that year prior. So it's collected and all year round you're contributing to it. But once a year in January is when it's due and they hold the money. So you'd think our services would be a little less.
Yeah, yeah. And we could get, that could be a whole topic, a whole other workshop.
Yeah, side break. Done. I'm done.
That is true. At ADP, probably about 20% of their revenue comes from the income that they receive on the hold of those funds.
Yeah.
Convenience fee. It's like a Ticketmaster thing. It's like,
I'm in the wrong business. I need to be at one of those holding companies.
you need a Shanna Quinn escrow company. Getting back to the topic of the day about the question, what's your best report for job costing? Shanna, what is your favorite costing report? Where's your sort of truth that you start with? I'm sure that leads into that you do, but what where do you start when it comes to job costing?
I'll say that up until Advanced has come out now with their ability to do the estimate versus actual. But right now, the majority of our clients are on the plus, even though I'm trying to convert them over for the new year to start utilizing that instead of the manual reports. Is that I've generated specialized workbooks for each of my clients based off of the job types, based off of how they're doing their estimating. So while the data comes directly from our QuickBooks, it is not reporting their transaction reports that I take out of there. It's nothing more than that as of right now. For the majority, for some of our clients, we have the advanced and we're using it for the job versus actual, and the job reports are great through that because of the customizations that you can put in. But it takes some time to figure out what's the best way to show that information to your client. If you're invoicing, I know we had this kind of discussion a couple of weeks ago about how invoicing occurs. So if you're doing T&M, you might be you might be providing an estimate versus actual on that. And so that is also an export and then import, because there's their job costing report, because if you have the markup on there, you obviously have to provide them that report. But on our internal side, our markup is our profit for the clients, right? So there's the client facing estimate versus actual, and then there is my client, the contractor's version of the estimate versus actual.
So let's talk about those, just the general reports. And I think it boils to 3 buckets, right? You mentioned one of them, estimates versus actual. And so the main concept of the estimates versus actual is, here are the estimates. Think I estimated what your job is going to or cost you, the customer. Right. And then the actual is what really took place, all posting transactions that were allocated to that job. One thing, right? And you want to understand the difference. What decisions are made out of the estimates versus where it's the wish list and what Santa actually brought me.
Great timing for that analogy. Yeah.
Yeah.
For some of my clients, it's a report that we can use to also, even if we're doing a T&M and we are tracking change orders made after original estimate provided, we are able through that report to still talk about and have that transparency with them about the progress on that job. If we're 100% built out on a line item, and I'm still saying from an accounting perspective, like we might have a couple of small things coming through, that just simply could mean to the client that there were some price changes, potentially light fixture prices went up. Mostly that would be like your allowance material on finishing items, but you're still able to communicate that to their clients on progress. Alternatively, you're also able to you're holding them responsible too for the changes that they're requesting throughout the project. That sometimes is my favorite because they like to call me and have those talks about like how much things have changed. And then I can just pull up that report and say, here's why. You changed your mind 3 times in the middle of a job on how you wanted your kitchen island to be finished.
The estimates versus actual is in the QuickBooks definition is what you put on the estimate between what you collected on invoices and what you spent on that job, right? Now, how does that budget, right? Because that's another aspect that you can do is you can create budgets by customer and essentially do the same thing. So if you're using the estimates versus actual, do you recommend to the customer to also do a budget or not really?
Those 2 separate reports that I was referring to is the estimate versus actual is the report that my clients would provide to their clients to discuss and show them, here's what we've estimated, here's what we've invoiced thus far. So they're able to track that change in the job or the progress of that job. The budget tool is what we use to create and use internally. So if potentially we had something, I don't know, T&M is a little bit more flexible because you're not committing to a certain, you're saying that you're paying me what it's going to cost me plus my markup, right? So in a fixed job, the budget is probably a little bit more important because that will tell the business owner, whoever's the estimator for the jobs, to say, oh, okay, I really underbid on what this material was going to cost me, or was this an issue with my vendor? So they're able to use it in multiple ways. They either priced wrong for whatever reason, and they can dig into that, or was it a change with the relationship? And the vendor provided them their estimate and said, here's what this job's going to cost me. So this is what's going to cost you. And then that price changed for some reason along the way, and you question it and you research it. So the budget is more of an internal operational tool, where the estimate is your client facing tool that you use.
Okay. And then, so the last one is the job profitability, is just looking at the actual, not the estimate, not the budget, not the plan, but just looking at the actual side of things. Did I make money on this? Is that really what it boils down to? Is being able to see it on a job or project basis, and what's the bottom line?
Yeah, the project profitability is going to give you that. The thing that we have to, however, take into account sometimes is if we have internal laborers that are subcontractors, and we use something like our time and material, or not time, our time tracker built in, where we need to make sure that we create a bill off of that time and then pay off of that time. So that flow has to work properly. Otherwise, if you just write a check out for the subcontractor, even though we've put in a cost associated to those hours and those hours are logged into our QuickBooks is not recognizing that it was paid because we haven't created that cycle of link between them. And therefore that cost out is not being captured in that. Just a side note about how we're making sure everything gets set up properly on some of our jobs with some of our clients. That was one thing that was getting missed. So it was walking through and having the conversation because they do their own payables with this particular one. Is here's how this needs to actually flow. Here's how this needs to work out. Otherwise, in that job costing summary, your profit's going to be way overstated because it's not taking those actual labor costs into account, even though the time was logged and we have a cost rate associated to that time. But yes, technically you would be able to use that to say, here's overall how I'm doing on my individual jobs or overall on my jobs. Taking that income, taking out your expenses, costs, and then here's the bottom line. So yes, it would be a tool.
That was always a long conversation when talking with that was concerned about time. All right, is that QuickBooks Desktop holds no value to time, right? Like you can run what you want, and there is no value to time until you turn it into some kind of transaction that does have a value to it, right? Yeah. It goes, and then you create the paycheck, or it goes into a subcontractor, and you the bill at that point.
Right.
Where QuickBooks Online is a little different because you're going to be associating a cost, a billable rate, or what at time. So QuickBooks Online report the illusion that there is a cost associated with that time. But again, until you really turn it into action, it's not going to fully vet out that time cost. So you do get a little bit of this false sense of security, or as far as the reporting is concerned, inside of QuickBooks Online, when you look at time reports, lo and behold, there's a value associated with that, but it really still holds no value as far as the cost is concerned until it moves some kind of
transaction. Yeah. And that just goes into making sure things are set up properly. If you're not the one doing it, so for me, it was easy enough to make them a quick video, walk them through it, and then I just make sure when we're pulling the reports for them that I'm reviewing it, making sure they captured it correctly. And the easy way of making it into a bill so we can capture it, and then making sure they pay off of that, as opposed to sometimes writing a random check. So just making sure things flow properly and they're being done accurately to make sure it's all captured.
So these reports are as accurate as the data that comes in, right? Yeah. And you'll be able to make decisions based on that accurate data, assuming all the stars are aligned and it's entered in as it should. Now, people are people. They do things. Some they take shortcuts, or they don't understand the nature of what it is. All this hard work that Shanna put into setting up these, catch these things when human error, because they will, right?
So I think for all of our clients, we have, I think we've even touched on this last week a little bit, or maybe a few times with bits and pieces, but every single time when we are updating our job reports for our clients, which is on average, probably the least amount of times is every other week for our client, because that's about as long as some of our clients want to go with their payable cycle. So I would never suggest that your receivable and payables are on different. If you're going to pay your vendors every week and you are doing T&M or progress invoicing, but it's not forward in the job progress invoicing, meaning this month I've got this scheduled, so I'm going to bill for that now. Especially if you're working with banks, they want to see completion of things before you move on and allow for that next draw. So you're typically billing in the rear of when things are being done. If you want to have things done or pay your vendors weekly, you want to invoice weekly. If you want to do biweekly, you're going to want to invoice biweekly. So biweekly would be the minimum amount of times we're updating our job reports, and we know what our clients' markups are. Plus, we use other identifying markers on transactions that are ones that are relate. So if there's like an absorbed cost on something, meaning like maybe, I think this was the example I used, was we had someone that was doing some work on the floor and installation of something, and they punctured a tube underneath the floor. It was a pipe, a very thin pipe that nobody knew in this really old house that was there. It still had water in it, and then obviously that creates an issue. That's a cost that, whether it's the subcontractor's problem, so then you're back charging it, or it's a absorbed cost on our end. We have identifying markers that we have in place to separate that out. So that profit margin that you were talking about a bit ago, is we use that as also a way to determine if we are on track. If I see that, if I know my client's markup is like flat 25%, this is what we are at, then without labor, I can easily look at that number and pull those reports and use that number to say, okay, something is off, and be able to locate it and be able to handle it from there. So there's different ways. There's the custom fields, there's the tags and stuff like that you can use to create these, what's the word I'm looking for? Your backup to catching errors, essentially.
Your safety net.
Safety net. 2 words.
So so basically what I'm gathering is that if you set it up right, then there will be, that is the ideal workflow for these things. And then as part of your setup, you'll understand, or your team will understand the I lost my train of thought. The things to look out for, the indicators, that the word I was looking for. There'll be some red flag somewhere on certain reports that will help identify, oh, this, we're drifting, we're following north, not true north here. And as long as you course correct regularly, and you talked about it, I think last week, where you're more of a keep up rather than a catch up, right? Like you don't want to be miles off course because you follow a month or 2 months or 3 months from now, rather than directly north. Right. It's a lot easier to course correct when it's just a little bit off course than it would be to, okay, the job and you're on.
And we use those reports too at the end of the job, those estimate versus actuals, the budget versus actual. So both of them are used internally at that point to also determine who maybe has not billed you yet. Subcontractors, big and small, sometimes I have discovered, are known for waiting. I don't know why we're waiting, but we get a lot of bills at year end. It's like this influx of, oh yeah, just send it all out. Like we completely forgot to invoice the last 2 months. we've received I've got clients that we got our bill for a job that's been done for 6 months, 6 months, and we just got the invoice from them. And so it's like at that point, that particular client manages their own AP, so we're more like of a reviewer. And now, because of this situation, they're upgrading their services to have us do their payables and the job costing reports for them, because that is something that would have been caught at the end of that job to say, okay, we're a month after completion, so I expect the last trickle to be coming in. But hey, for some reason, we haven't gotten a bill for the outdoor kitchen, or we haven't gotten the bill for the final draw for the pool. And so those would be things that would get captured. We can then connect with the vendor, because if, especially we're doing a T&M job, I want to be able to go to our client and say, our final draw is in for that pool. We need to invoice your client for it now. Waiting 6 months after the fact of a job completion, and then going back to your client and then their client to say, okay, I know you've been enjoying it for the last 6 months, but we finally got the bill. It doesn't reflect well on the business owner. And there's only so many times you can probably throw your subcontractors under the bus for their lateness. That's one of those being on top of it, as opposed to playing the keep up or catch up type of role.
Yeah, it's very your end to go to the gym after a year's worth of not eating or exercising, right?
Yeah. I have to say,
going to be
those people that just go in January, you make it really hard for me to want to be there. And I'm constantly like waiting for a machine that every other month I don't have to wait for.
It's a resolution month. Yeah. January. They go in January, they realize, oh, this is not in the grand scheme of things. If they had gone, if they had been like and gone the whole year, then it wouldn't to do that. This is the same thing where you up with your costs by working with an professional to keep up, but of course that's going to cost them more to do that on an ongoing basis than it would be to that 6 months later. It's really just that case, but they have to weigh that as an option. What's the tip point that most people come to that realization? Is it just a frustration thing? It's like, oh my gosh, I really need to, like, when do people really decide what is the because it's not going to, if it were me, right, you are in a situation where in that kind of industry, you don't go looking for a carpenter or a plumber, looking for a plumber until you got a leak. Like, is the leaky sink for a lot of business. Say, okay, enough is enough.
I think that it is if you think that you're making all the right decisions and you 100% know the reason of where, like the explanation of where your money is gone, but your money is low, then you have to sit back and say, okay, I'm the expert at this, but I'm not an expert at this. Just left field real fast with the new business and my new business type, the Bookkeeping for Contractors group. There's a lot more marketing and creativeness that goes into that. And that is not how my brain operates. I heavily rely on Pinterest to help me get through every single birthday party planning I have ever had to do. And I need detailed instructions on what you did. Only if ChatGPT existed and was easily accessible with visuals back when my son was born, that would have been great. But my brain doesn't operate that way. And I know it doesn't operate that way. I don't know how to build a website and how to code. So it's an investment up front to do it and to hire somebody who is expert at that. But in the end, that's going to save me because I'm not attempting to do something and putting all this time investment into it and then being like, oh, that was done completely wrong. And now I've wasted 50, 60 hours. And now I have to hire somebody to come in and not just do it correctly, but erase essentially everything I've already done and put my blood, sweat, and tears into. So just knowing upfront that you are not an expert at everything and accepting that's okay because none of us can be perfect in everything that we do. Knowing that upfront and
Well,
making that decision. I just said I'm not creative, Dan.
okay, you got me.
But thank you. I think it's fun to be creative. Like when I'm doing it, it's a lot of fun. And I sure as heck take credit once everyone sees like how amazing a birthday party I've thrown for my child. I'm like, I did that. Even though it probably in the background was somebody else.
Yeah. As far as having that self-awareness, your own limitations, and I think it's human nature to look at something and go, well, it can't be that hard.
Yeah.
Or it can't be that it costs me. I'll go a $5 or I'll go out that seems less costly. Of course, that's usually where people put that value is that they'll either see somebody's prices sticker shock and go, okay, this they'll reassess. And in the trades, I'm sure it's the same result. Where I can remodel my bathroom. How hard could this be?
I can replace that toilet for sure.
Yeah.
Is that part probably one
of your discovery? Is when you talk to a client, say like, when did you realize that you needed help?
At that point, sometimes it's almost obvious when they've called and I'm doing my initial deep dive into their QuickBooks to see exactly what's going to go into this project. What am I looking at to quote you for an ongoing assistance? It's almost obvious at that point why they've come to me or why they've sought out professional assistance to help them. I think that it's a matter of, so I'll give you an example.
I'm just wondering if like you understand how they got to you, because if you understand some of the history where maybe they tried some of these things or they gave this task to a niece or something like that, where they tried the DIY route themselves, does it help you understand where they where they
absolutely.
and where they might value?
I don't come out and exactly ask them, so what led you to me? I ask how they heard of me, but there's other questions that I'm having and a conversation that's occurring prior to. I call it the discovery call. It's for me to discover and learn more about them, about their company, about why they built their business. I get personal because I also want to see from my side if they're passionate about what they're doing. Because on my side, I can only, I think, support someone that's truly invested in what they're doing because I'm going to be just as invested. I might be the outsider and hired help essentially, but I'm there to support you and to provide you with a better financial future, with better clarity of what your financial situation is. That's our jobs in the financial as an accounting in the financial world as their accounting professional. No matter what level we work with clients at, it's important for us to continue to have those conversations and have that open dialect, I think, with our clients. But I had a conversation with somebody just yesterday. It was a project quote that I provided from one of my, well, actually, she was one of my mentors when I got started. And she provided this person my contact information to reach out. It's a very big job, and the books are a huge mess. It's going back like 7 years, and she's selling the business, so it needs to get cleaned up so she could be properly evaluated and sell. And so obviously the owner wants to, the buyers coming in are going to want to see clean books, understand it properly. It's a big business, so it's not like this small paw coffee shop. It's a very large business. A lot of assets are involved. And so I provided the proposal. She called to discuss it with me. And my question to her was why she was hesitant to proceed with me. And she said, the rate. And I said, if you're not willing to put in 1% of your revenue from last year into cleaning this up to sell, what would you tell me your cost would? What would you be willing to pay me? And she didn't look at it that way, and then came back and was like, I need to think about this. Then called me literally as soon as we hung up the phone and called me back and said, I'm so sorry. If I'm not willing to invest 1% back into my company to make it so that we can sell it and have a good life after this, then this should have been something I did years ago and should have invested in. 1% of my bottom line or 1% of my revenue. It seems like a lot when you put it on paper like that, but in the reality, that's going to make my life so much better. It's worth that investment. And not that 1% was how I judged what my rate was, but it just happened to be in that 1% range. But having that conversation and being open and honest about it is important. But also as an accounting professional, it's important to also stick by with what you're, don't start being like, I'm having a sale, or I'll have a promo code, or don't chase it back. Know that your value is there. Know what your worth is when you're quoting.
Any final time, but anything that you wanted to make sure as far as the reports of job that we get across here?
I think that the reoccurring theme in a lot of our calls is that everything always varies. It depends based off of the industry type and jobs type that you're working with and supporting. But the setups are always so key to making sure that what your system spits out at you and as a report is accurate. I'll put it out there again. If anyone has questions on how to set something up and specifically on a certain topic around this that maybe we didn't discuss, happy to have you reach out to me and we can either touch on it or I can have a sidebar email or conversation with you about it to make sure that you're confident and comfortable with how things are working within the system.
All right. And then is your B for TG group that you're creating? Give us a status update on that.
So we are finally ready. It just grew into so much more than I was anticipating. Big thanks for Intuit Conference and with Dan. I'm really excited about what it's morphed and grown into, and it only just means so much more options, so much more now is available to our members that sign up with us, and we'll also now have a firm level membership, which I think, guys, put out there last week. So it's all super exciting. Monday, we are doing a soft launch where we'll be posting information about it on our social media. But so stay tuned for some information. But soft launch is December 15th. And then the go live is going to be now January 1st for both small business owners of trades looking for accounting professionals and for the accounting professionals and bookkeepers to sign on with us and become members. So very exciting.
We're want to check out on his website. We've got a QR code up there at the top there. You can just whip out your phone if you're watching us live replay, and we'll put the link in the notes as well, so you can always check that out. Next week, we're going to be talking about controls, workflows, and automation. So this is where the efficiencies come in, right? Or being able to, once you've set it up and once you've established those things, allowing an action create another action where you're going to have, when it comes to people, processes, and programs, you're going to take a lot of the people out of being the single source of failure when it comes to these automations, right?
What did Intuit call them? So it's not going to just be AI intelligence, automation intelligence. Now you're removing human intelligence, and what you're saying is human error. So now you can just blame AI.
Exactly. The machine made me do it. My dog ate my homework. All right. So hope everybody has a great week, and we'll see you next time on the Workshop Wednesday. And that wraps up another insightful episode of Workshop Wednesday, brought to you by Schoolofbookkeeping.com. We hope you enjoyed today's discussion and took away some valuable tips and strategies to enhance your bookkeeping practice. Remember, if you want to stay ahead in the world of bookkeeping and accounting, be sure to visit Schoolofbookkeeping.com. With a wide range of courses, resources, and expert guidance, you'll find everything you need to sharpen your skills and boost your career. Don't forget to subscribe to our podcast on your favorite platform so you never miss an episode. And if you enjoyed today's show, please take a moment to leave us a review on your podcast platform of choice. Your reviews help us reach more listeners and continue to bring you the best content every week. If you have questions or topics you'd like us to cover, reach out to us on social media or send us an email at support@schoolofbookkeeping.com. We love hearing from our listeners and are always looking for new ideas to explore. Thanks for tuning in to Workshop Wednesday. Until next time, keep learning, keep growing, and keep excelling in your bookkeeping journey. I am Dan DeLong, and we'll see you next time.